What's good, my fellow stock market freaks? It's your boy Kevin. Welcome back to the channel. The stock market took a big old dookie on Friday, ended Thanksgiving week with a bang, crashed across the board. All the major indices, the S&P 500, the Dow, the Russell, the triple Qs, they were all down on the day. The biggest one-day drop that we have seen probably since late September, early October. It was caused by fears revolving around the Omicron, or whatever the hell you call it, the Roni variant. And the market didn't like it. The market likes economies open. The stock market does not like shutdowns, lockdowns, and travel bans. So is this the beginning of the 2022 stock market crash, like a lot of talking heads on CNBC and Fox Business are predicting? Or is this just another buy the dip situation? Because we know the buy the dip crowd, they've been getting paid. They've been making bank. They've been getting that guap. They've been stacking that cheddar, folks. Look at the weekly chart on the SPYs here. If you've been buying the dip, you've been cashing the bills. You've been collecting those tendies. You've got all these dips. They've been bought up along the way up. Sure, eventually there is going to be a dip that rolls over and continues to roll over, that won't get bought up. And is this that dip? I think that the market is too expensive. I think there are a lot of stupid bubble stocks that are trading at an extremely stupid valuation. But are you going to step in front of the moving train? I just did. I just stepped in front of the moving train that is this market, and I bought put options. I bought put options. I'm already down on my position, of course. So I bought put options right here. I bought the December monthlies. So a couple weeks out, give us some time for the trade to work. I bought the December 17th, 462 put options, bought 15 of them. I have an average price. I think it's like $750 is my average price. So I'm already down a little bit on those options. And here's what I'm looking for. On Friday, we gapped down and we sold off. This is where we opened up on Friday, and then throughout the day, we sold off. Right now, we're back up testing this resistance area. I'm looking for that resistance area to hold, and then for us to roll back over and test those Friday lows. I think there's going to be some increased volatility as fears over the variant and fears that we're just trading at a valuation that really doesn't make sense. The economy and the market are being propped up. You just have a turkey baster, an artificial insemination baster, one of those things that they fill with horse, you know what, the horse man juice, and then they jam it in there and just shove it in the other horse, and then a few months later, a baby horse comes out. Well, what the government's doing right now is they're filling up a big giant turkey baster full of money juice, and they're jamming it up the economy's butt and just squirting all that money in the economy. That's not natural. A lot of times, those horses that are filled with horse juice, they come out with like 3 eyeballs. They got green hair. They're all jacked up because it's not natural. And this isn't natural either. And I think it's going to result in some pretty ugly downside price action in the overall market. And that's what I'm looking for. I think we do need some consolidation. The market needs to breathe and kind of take in the data. What's going to happen over the next couple of years with the economy? We've never seen anything like this. We've never seen the money come into an economy like this. The government just start printing money, just throwing that money, just throwing the bills. We've never seen that. And I think there's going to be some ugly downside action. This might not be the start of it, but it's going to happen. I could be wrong. I'm often wrong. But the difference between a trader who's only a trader for a couple of weeks and a trader who can continue to trade even after they have a losing trade are those who realize they're wrong and get out of the way. So if I'm wrong and this thing closes up here above 466 and holds it and just starts to consolidate above it and starts to trend higher, I'll be wrong and I'll get out of the way. I'll stop out of that position and move on to the next trade. But one of the main reasons I think the market is overvalued, I think there's a bubble kind of forming, is what's gone on in Rivian. Rivian has no business in the world trading above $100 a share. This is a $15 or $20 stock. And I know a lot of people like Rivian. They make a really nice electric truck. I like their truck. I think they have the potential to be a really nice electric truck manufacturer. But here's the problem. Rivian right now has a market cap of $90 billion. All right? Why does that matter? Well, look at GM. General Motors, one of the biggest auto manufacturers in the world, they sell a shitload. And when I say that, they sell a ton of trucks. They did sales last year of $130 billion. They have a market cap of $88 billion. They have a market cap less than Rivian. Rivian has not one single product on the street. They have zero sales. They don't even have their home base. There's talks that they're building a manufacturing plant right down the street from where I live. And that's just a joke. There's no way Rivian, a company that has no track record of success of any sort, is trading at a higher valuation of GM.
But wait, Kevin, Rivian's an EV manufacturer. EV is going to see all this growth, and Rivian's going to grow and become the next Tesla.
Shut up. No, they're not. Nobody's the next Tesla. Tesla is Tesla. And if you go out buying stocks, looking for the next Tesla, you're going to end up broke. All right, so GM is going to transition. They're going to start selling electric trucks. They're going to start selling electric cars. Ford is going to do the same. Toyota is going to do the same. Honda is going to do the same. All these big established auto manufacturers are going to transition to the EV space. We're already seeing it. So if you're an investor out there and you think that Rivian's going to have the EV truck market all to itself and these big behemoths are just going to let them do it, that's just not going to happen. GM is going to stay around. They're going to continue to be a leader in the truck space. Dodge is going to start manufacturing electric trucks. Ford already has the Lightning coming to market. I honestly believe Rivian's market cap should be around $10-15 billion. They just don't have any track record. They have no proof of concept. Their truck costs 90 grand. Okay, can you sell a product to the masses that costs $90,000? I don't think so. And sure, they say we're going to have a common consumer vehicle as well. Okay, I'll believe it when I see it. Until I see it, I don't think this company is worth $90 billion. And look at some other companies that are good long-term stocks, long-term companies, but they're just trading at stupid valuations. Look at Etsy. Etsy is a company that I liked. I owned Etsy way back here, under $70 a share. I owned Etsy. Do I think it's a $300 stock? Hell no. Hell no. $300 is what Etsy was trading at last week. Right now, we're trading at $280. This is probably a $150 stock. Look at a company like Peloton. Peloton was up here at 170. People realized that everybody was just buying these bikes because they were stuck at home. The sales were artificial. It wasn't real. Now it's trading at $42 per share. And I think we're going to see a lot of charts that look like the Peloton chart. And I'm not hating on Etsy. I'm not hating on Rivian. I just do believe that we're in a little bit of a bubble, and once that bubble pops, we're going to see some serious volatility. Now, the trade I put on the SPYs, that's not necessarily me looking for the bubble to pop. It's too short term of a trade. We're only talking about a couple week trade, right? But if you're looking to kind of get a longer term trade, what I would do is I would go way out. I would go way out, probably 6-7 months out, maybe even to like a March 22 monthly. And I would go out of the money, probably the 450 puts, and look at something like that. But right now, I'm just looking for some short-term downside. I'm already down in the position. The market's climbing as we speak. So we'll see what happens. All right. right, it's the next day, folks, and we just exited our position. We made $8,000 today. Total profit on the overall position was like $6,000. Really nice trade. Worked out perfectly as we gap down today as the market remains fearful of the Omicron variant. The Moderna CEO or a Moderna executive came out and said that he does not believe the vaccine is going to remain extremely effective against the variant. We don't know if that's true or not, but it fueled fear into the market and we saw a major sell-off. Remember yesterday we talked about buying the put options back here if we look at the daily chart, and we actually were down on the position all day yesterday. Into the close, we had a spike. Boom, we entered the position like right here. We held through this pop using this area of resistance as our stop loss. And once again, whoever says technical analysis doesn't work is just an idiot. Look at this chart. Look at this chart, folks. Perfect to a T. It doesn't always work out like that, but sometimes it does. We had plotted out these support and resistance lines on the chart. We were looking for a break down under here, and that's exactly what we got. If we go to a faster time frame, a 5-minute chart, we got short. We zoom way out. All right, so we're short way back here. We bought put options. This is institutional buying. This is not natural price action. This is hedge funds buying, and it did scare me. I'm not gonna lie. Just that steady grinding action higher, but you got to stick to the plan. You can't stop out just in the middle of nowhere, no man's land. You got to wait for the plan to resolve. If it doesn't work, it doesn't work, and you stop out. But we held it overnight. We got that beautiful gap down that we were looking for. And then once the market opened, we actually added to the position in this area consolidation right here, looking for a rollover. But we didn't get it. It spiked. We didn't panic. We held the position. 10 minutes later, I look at the chart, and this thing just started rolling. We came and we slammed into this support here. Look at this chart. To a T. It slammed into this support, and that's where we found a bottom. Now, if we break through this support here, we have a long way down, folks. If we go back to an hourly chart, if we break through that 457 support on the SPYs, we have a long way to go all the way down to 453 or 452. So it's going to be interesting to see what happens over the next couple of days. We made a really nice trade, and I don't want to get stuck to one side or the other, right? You don't want to be just short. You don't want to be just long. You want to be able to be versatile and trade both sides of the market. We nailed this one, and we're going to nail the next one as well. Subscribe, hit that like button for me if you got something of value out of this video. I'll catch you guys in the next one. Until next time, deuces.